So what are the chances of a recession in housing in the UK in 2023? Here are 4 reasons why I expect house prices to fall over the next 12 months. Let's first of all take a look at what has happened to property prices between 2005 and the autumn of 2022. And I'm using the Halifax house price data here. Other surveys are available. But you can see the relentless march of house prices increases, in particular since the pandemic, the summer of 2020, with prices climbing towards £300,000 average. Well, the housing market has defied gravity for many years, but here are 4 reasons to think that house prices, property valuations will come down in the next year or so. The first is that mortgages have become more expensive. The cost of a home loan has gone up sharply, and they're likely to stay high. Indeed, millions of people face the challenge of adjusting to much higher 2-, 3-, and 5-year fixed rate mortgages during 2023. Around 2 million British borrowers must remortgage their house between now and the end of next year. That's about 25% of all the outstanding mortgages left in the UK. And with incomes going down in real terms and taxes going up, many people will not be able to afford those extra mortgage repayments. And here's the picture showing interest rates in the UK for mortgages, different types. You can see the sharp change in the interest rate environment in the last 6 months in the UK. Indeed, mortgage interest payments as a share of disposable incomes are expected to climb from 7% to nearly 10%, which will be the highest since the global financial crisis of 2008. The second reason why house prices are likely to fall is that consumer confidence has collapsed. Animal spirits have fallen. People have less money to save, which makes it harder to find the money for a deposit for a mortgage. And this fall in confidence is associated with one of the deepest cuts in real disposable incomes for decades. Now, people in work are seeing cuts in their real pay. Unemployment is starting to rise. And the tax burden, the overall burden of direct and indirect taxes, is now at a 70-year high. Here's the chart showing consumer confidence. You can see what's happened. That the long-term average is given a value of 100. You can see where we are now in the autumn of as we come towards the end of 2022 in terms of consumer confidence. It has fallen very sharply. The third reason to expect a looming recession is that already we're seeing the asking price for properties starting to go down. Zoopla are saying that there's been a 40 to 50% reduction in housing buyer demand. A lot of potential buyers are stepping back from the market, maybe postponing making an offer, a bid for a property. Sellers are having to lower their asking price to tempt would-be buyers. Indeed, according to Zoopla, who published data on this, sellers are accepting 4% discounts on asking prices to achieve a sale, and those discounts are likely to go up as we head into the new year. And the fourth reason is that landlords are getting nervous. The landlord sector, of course, the buy-to-let sector, has been a factor driving up demand for property generally. But landlords are facing a big squeeze. The costs of running properties, the energy costs, the cost of maintenance and things have gone up. The mortgage costs on those properties, those buy-to-lets, of course, have become more expensive. And there's clear evidence that some landlords are now looking to sell, which in the short term will increase the supply of properties on the market and therefore bring down prices. And demand for buy-to-let properties is likely to weaken, particularly if the UK economy heads into a prolonged recession. So here's a headline from the Financial Times: buy-to-let landlords under strain from mortgage rate rises. And generally, we're now starting to see the turnaround in the market. Here's a headline: in mid-December, UK house prices fall at fastest rate in 14 years, 2.3% decline for November, equivalent to about a £7,000 reduction in the average price, according to the Halifax House Price Index. So, dark times ahead for housing, I think, in 2023. So much does depend, I think, on where and when interest rates peak in the UK. Here's the chart showing the base rate of interest set by the Bank of England's Monetary Policy Committee. We've had 9 increases in base rates, consecutive meetings, currently at 3.5%, likely to go higher in the early months of 2023. Where will they peak? 4%, 4.5%, maybe 5%. If they do, and if they stay relatively high in 2023, then mortgage rates will also stay high, and that will be obviously a key factor causing the housing market to experience a recession. So yes, we think house prices will go down in 2023. Who knows by how much? 5%, maybe 10%, possibly even more. This is a key measure, of course, of economic activity, and it's one to keep an eye out as we head into the new year. Thank you for tuning in. Stay safe, stay happy, stay positive, and see you sometime soon.